Recently, what's intrigued me the most is to find companies that have power, sub 6 cents a kilowatt hour power. There's no question now that you're not building anything without your own power source. So in North America, that's going to be stranded gas. But in some of these Nordic countries like Finland, you will be able to tap into abundant nuclear power. But it's complex because you need the permits as well. So you can't build data centers or facilities that use that power without pizza joints and restaurants and dry cleaners and schools. I mean, you can't put it out, as some people have found out the hard way. There's been lots of mistakes made in assumptions about data centers because it's such a nascent sector and it's so early. Even the assumptions about turbine use and longevity of turbines in recent months have been put under scrutiny because the load that are going on some of these data centers is so heavy that it shortens the life of turbines. So there's all kinds of work having to be done in power management and keeping these places up and running, whether it's cloud compute or whether it's AI or whatever. You've got nothing without a power contract.
Kevin O'Leary just made his first ever investment into a Bitcoin mining company. And it's one that you probably have never heard of because it just went public. You're listening to the Mining Pod brought to you by CleanSpark. And for today's show, we interview Kevin O'Leary, legendary investor and Bitcoin and crypto and Bitcoin infrastructure investor, to talk about why he chose to invest in Bitzero and what his read is on where we are in the current AI bull market. You're listening to the Mining Pod, and we will be right back after a word from our sponsors. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call Fbox, the leading digital infrastructure company with all-encompassing cooling solutions. Fbox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how Fbox can help you optimize your digital infrastructure today. Mr. Leary, welcome to the Mining Pod, sir. How you doing?
Very good, thank you.
Yeah, thank you for joining us. I know it's a busy week. Big news with Bitzero coming out. So to set the stage, can you give our listeners a quick introduction and rundown of Bitzero and what it hopes to accomplish?
Well, I think the market's figured out in the last 3 years that the North American grid is out of power for whatever, whether it's mining, Ethereum or Bitcoin or data centers, cloud compute, AI trading, you name it, there's just no power. You can't get a gig of power anywhere in any state. Because when you tie to the existing grid, you cause a CapEx explosion and the cost of implementing it, and the local community suffers 10, 15, 30% increases. So the hospital, the library, the schools, local residences, and no mayor or governor is going to put up with that. And so it's really been difficult. And I'm speculating now that 50% of the data center announcements in America will never be built, in North America for that matter, because they don't have the permits, they don't have the power, they don't have the water, they don't have the fiber. They're not close enough to hospitals and communities where people that are going to work, they're going to live. A wide host of reasons. Because I've spent I'm a real estate developer. It's one of my largest sectors I invest in, have for decades. And there's a real gold rush trying to figure out how to do this, but it's extremely complex development. But there's one constant, and it's power. When I think about my investments in digital right now, I look at a number of factors. Number one is I've always wanted to own the assets. So, if you want to talk crypto, that's Bitcoin, and I own Bitcoin. But I also want to own the infrastructure, and that is the exchanges. And so I own investment in Coinbase and Robinhood, and in Canada, WonderFi. I'm agnostic to the price of crypto. I make money every time someone trades it on the exchange. So that's infrastructure. But recently, that's what's intrigued me the most is to find companies that have power, sub 6 cents a kilowatt hour power. You find me one of those. They're almost impossible to find. And that's what Bitzero has. Bitzero is basically a real estate power company. It searched the world for the lowest cost power, found land, contracted or bought it, got permits, got fiber, got water, and they're agnostic to who uses that power. If they want to make cash flows, as they do on some of the sites, they make it available for Bitcoin mining. But right now, there's a lot of interest in what they're doing in Norway and Finland around AI compute. And why? Power. Those countries have a remarkable abundance of hydroelectric and nuclear power. And that's really what the excitement on Bitzero is all about. And I'm very interested in that from my perspective, because the demand for data centers just worldwide is about 250 gigawatts. And that's huge. In North America alone, it's 45 gigawatts. There's only 5 gigawatts under construction that are permitted. So there's the fundamental demand all built around power. So the bet on Bitzero for me is permits, power, land, fiber, water, contracts.
So you mentioned that you expect 50% of these data center build outs potentially to fail for a number of reasons. I mean, you mentioned it, you have to have fiber, you have to have water, hopefully you have oil and gas hookup for backups. There are so many factors. Are you close enough to a major population center? And we've seen all of these different Bitcoin miners start to expand into AI and HPC. So I'm curious, what was it about Bitzero specifically that said, this is the one I want to invest in versus some of the others as well?
Very specifically, sub 6 cents US a kilowatt hour power, real contracts, actual contracts on hydro and nuclear power. I mean, that's basically it. That's what really got me digging deeper into it. Multiple geographies, so you have diversification. There's no question now that you're not building anything without your own power source. So in North America, that's going to be stranded gas. But in some of these Nordic countries like Finland, you will be able to tap into abundant nuclear power. But it really boils down to, can you be competitive? And in fact, I've told people, if you can find me a company that has cheaper power than 6 cents a kilowatt hour contracts, I'll invest in that too. Because that's what it's all about. At the end of the day, it's power. But it's complex because you need the permits as well. So you can't build data centers or facilities that use that power without pizza joints and restaurants and dry cleaners and schools. I mean, you can't put it out, as some people have found out the hard way. They build data centers for billions of dollars 4 hours away from where community lives. I mean, what do they think? It's going to run by itself? So now they have to build a town around it. There's been lots of mistakes made in assumptions about data centers because it's such a nascent sector and it's so early. And so even the assumptions about turbine use and longevity of turbines in recent months have been put under scrutiny because the load that are going on some of these data centers is so heavy that it shortens the life of turbines. So there's all kinds of work having to be done in power management and keeping these places up and running, whether it's cloud compute or whether it's AI or whatever. But it all boils down to power. And I keep saying it over and over again. That's, if you're an investor and you look at this space and you do your work and your analysis, you will come to the same conclusion. You've got nothing without a power contract.
You mentioned location being really important, obviously power being really important. What are some of the other overlooked or underlooked questions that investors don't ask themselves or should be asking themselves when they evaluate, especially these Bitcoin miners who are expanding into higher forms of compute?
Well, stability of policy in the government in these countries really matters. And data sovereignty, do they have that policy? Because if you're going to be leasing or selling to a company that's global, they want to know that they have data sovereignty and control over who gets access to that data. These are all the issues, but I'll give you an example. 5 years ago, the most attractive hydropower contracts were in the Ukraine. I mean, they had sub 3 cents a kilowatt hour there. And of course, if you built your data center, as some did, a tank rolled over it. And so, or it got blown up by a drone. So you have to kind of look at the geography you're putting it in and determine how much risk you're taking. So I think, obviously countries that are going to benefit are ones that are stable on policy. So those would be the Nordic countries. Canada has tremendous potential because they have so much stranded gas. States like West Virginia, Utah, um, you know, Mississippi even. I mean, you've got to find the power, and then you have to find the policy. You've got to make sure you're not on a floodplain, and then you've got to make sure you're within a community where you can hire the talent, the engineering. Because for 2 years, you're going to be building it. Those are high-paying jobs. Most governors want AI data centers. But, you know, you also have to be able to provide backup power. And so you may need to incorporate digital diesel, and in some states don't allow that. So all of these comes into play, but finding the land is extremely difficult. Finding good land that's not in a floodplain, that has fiber already there, near a town, very hard, very, very hard. And so, you know, that's what I do. I try and find 2,000 to 4,000 acre parcels of land near stranded nat gas, and then send the team over to see, can we get the water? Can we get the permits? What's the state of the governor's position on it? And can we work with local government? You can't do anything without all of these participants giving you the go-ahead.
The regulation one, I think, is so important, and Bitcoin miners are no stranger to this. If you look at what happened in Russia with the outbreak of the war, you know, BitRiver was a huge company there hosting ASICs for a lot of Americans, and overnight those are gone. You have no recourse. Similar things kind of happening in Ethiopia right now. A lot of miners have taken off over there recently. Suddenly there are these kind of overnight price hikes to the electricity. And so it makes sense to me why Bitzero is looking in the US, maybe potentially down the road Canada, but in Norway and Finland as well. Strong rule of law, clean power, especially in the Nordic regions. And I wonder, in terms of, you know, Bitzero's expansion strategy right now, Bitzero has about 1.5 exahashes humming away in Norway, and the plan is to also roll out AI and HPC loads as well. What would the strategy for that be? Will that be targeted at specific sites like the ones in Norway and Finland, or the North Dakota site as well, where there be a mix of Bitcoin mining and AI load on the same sites? What's the strategy for that expansion going forward? And which sites should we expect to see more AI load from?
Well, if as an investor, when you talk to management in any of these companies, you want to know if they're aware of the 18 customers. There's basically 18 customers. And in the case of Mo, the CEO there, he's well aware of who they are. The real strategy, as far as I'm concerned, and why I've invested in it, is the management there is interested in building the shell and the power, and having it shovel ready, permit ready, to let any hyperscaler just roll in their stacks and build out the last mile the way they wish. But they can't do it without power. And so we have to secure that power, get the contracts, secure the land, prepare it, get the fiber connected, get the permits for that, get the water for cooling. All of that stuff is what companies like Bitzero do. And that's the added value. They don't necessarily build the data center at the end of the day, because as the markets evolve, a Google, an Amazon, a Microsoft, XAI, SoftBank, they have their own build teams. But what they don't have is sites. And so, you know, 2 years ago, there was just all these announcements, and now none of these things are being built because one of the underlying assumptions fell apart. It's usually the power. It was assumed that you can go to a power authority. Oklahoma has 3 power authorities. Not one of them can give you a gig of power. Same with Virginia. So, you know, same with West Virginia. You've got to bring your own turbines if you can get near nat gas pipeline. You have to negotiate the cost. So the days of tapping to the grid in North America, those are over. They're just over. It's going to take decades to make the grid bigger and more. And you've also got growth in the economy. So you can't just go into a state and suck up 20% of the power that they're building. That's not going to work. So it's more of a community cooperation where you build in turbines and maybe you give back some of the surplus energy off the turbine generation. But those turbines are billions. And so it's a large debt and equity raise, very complex deals. And there's only so many teams that have ever done it. You know, the best thing to do is to interview the management and say, have you ever done this anywhere? Do you actually have an operational site where you have built it and it's operating and it's cash flowing? And in the case of Bitzero, they do. They've got the Norway example. I'm pretty excited about what they're doing, and I keep going back to, people call me up and ask me, what are you investing in? I'm saying I'm investing in power contracts, sub 6 cents a kilowatt hour. You got to find me those wherever they are. I mean, obviously, in geographies where there's stable policy, and you detailed the Russian thing, the Ukrainian thing, Ethiopia, all that. That's not where I put capital to work. I need to see a glide path of at least a decade. So you need some stable policy.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
I want to zoom in on something that you mentioned right there about the 18 customer point. Could you expand on that? Because to me, it kind of speaks to these kind of concentration worries that some investors might have, or the idea that really there are a few big players really moving in the AI space, and you got to be talking to those companies if you want to have a good deal on the table. So can you unpack that a little bit for us?
Sure. It's a very symbiotic relationship. When you announce a site, the community is so small, there's probably 25 people in it that get that information and immediately find out what are the attributes of the site. How many acres, how much water, what permits have been already secured, which have been not. And so these hyperscalers are pretty agnostic. What they need is really good, very productive power contracts. So that's how it starts. And generally, you're going to get a narrative with them saying, what do you got and when are you going to have it? So you're not really going to get into a negotiation until you are shovel ready with permits. So the role of the investor is to decide how much risk you want to take on, because it's really a 2 to 2.5 year process of getting to the place where the hyperscaler is either going to lease or buy from you. However, you talk about concentration, there is, but the one thing that gives me solace and lets me put more capital into this space is I look at the implementation of AI sector by sector. So there's 11 sectors in the economy, and as of today, every single one of them is using AI tools for productivity or margin enhancement. I don't care if you're financial services or your real estate or your medical pharma company, doing research, whatever, you're using AI. And so the demand's insatiable. You've heard that multiple times. The CapEx is so high. It's so expensive to build 1.4 gig, which is kind of the minimum. So to get a gig of compute power, you need to build 1.4 gigs so that you have some redundancy, particularly for AI learning models. And so you really have to think through, that could be up to $7 billion investment, depending on how much of the stack you're going to own or how little you're going to own. It could be 3-4 billion, but it's a lot of money. And so the first, I don't know, I'm just giving you some round numbers. The first 500 million are to do the engineering design study, get the permits, secure the land, buy it, secure the water contracts, maybe put in infrastructure for the power and the water, bring the nat gas pipeline to the location. All of these things have to be done first. And so there's only about a dozen companies that have ever done that. And so you also have to get contracts with them. And I'm talking worldwide here, and I know them all. And so it's a very interesting time in real estate, because it reminds me, I used to do a lot of work in climate controlled storage, where you build a shell with power and permits for either a pharma company or a company that requires a large climate controlled space. It was far more simple in some ways, but very much the same in others in terms of getting permits and water and power and fiber and security and all of that stuff. And those projects were 2 to 3 years. And this is very much like that. In fact, some of the people that I'm working with came from those days. And it's like getting the band back together again.
I'm curious, just from your perspective as a seasoned investor, someone who's been around for a while, seen multiple different cycles from multiple different asset classes. What's your read on where we are in the current AI bull market? There's a lot of chatter about things slowing down. There's a lot of chatter about things just getting started. Curious about where you keep your head right now in terms of where we are and how it helps guide your investing decisions.
I sort of look at it from capacity desired sector by sector. So I am not in the camp that says we're in an AI bubble, because I talk to the CEOs of the S&P 500 about what their plans are for the next 3 years on AI. Nobody has enough compute power. Nobody. And they don't know where they're going to get it. And they don't know because they don't know what the power solution is going to be. And I think not only that, we have this competition going on with China on defense. The government has to come up with compute power too, just to stay ahead of China, because the way wars are going to be settled just in a few years is going to be a lot of use of drone technology, robotics, a lot of AI compute required for that. And you saw that strike on the nuclear facility in the Middle East. Very few boots on the ground there. Precision satellite technology using AI to do that. And that's just the beginning of it. And so you really want to make sure that from a defense point of view, so China doesn't have permitting problems for building power. They simply, and they're doing this every month, putting down another coal burning electrical generation plant. They don't have to go through any procedure. The supreme leader just simply points to the map, puts his finger down and say, build one there. And that's something to be concerned about. I don't agree with the policy of holding back chipsets from any US company. The whole idea, in order to win AI data supremacy, is to sell everybody everything and then force them, because of the technology, to develop their stacks on American chips, all of them. So that's how you win, because if you don't think the US can remain ahead on innovation alone, then you won't win anyways. And so by holding back a chip from an AMD or NVIDIA to China, that's incredibly bad policy, because it just incentivizes Huawei to invest more in their tech stack and train more Chinese developers, which is a horrible outcome. So I think we got that wrong. And we should be selling everybody everything made in the US, so that we dominate on AI development and we control the hardware stack. And I'm including our arch enemies, including Russia, Iran, Iraq. It's all to them, everything. And they have to become dependent. And the other thing you find out, and this is what we learned during the Second World War, is when you do that, you can identify the geniuses in countries back then, after the Second World War, like Germany. Those rocket scientists, where do they eventually get the US into space? Well, they moved from Germany to the United States because they wanted to move their families there, and the government was quick to recognize their talent. And all of a sudden, that resource was built on American hardware, American ingenuity, and much of the defense that we have in aeronautics today came from foreign developers. And the way we identified them was they were using technology that we were advancing. Same thing here. So if you had, I don't know many countries where people are risking their lives to cross rivers to get into. You don't see that in North Korea. You don't see it in China. You don't see it in Venezuela. You don't see it in Cuba. So why not sell them chips? And as soon as you find somebody that knows what they're doing, because geniuses are born every day, you say, how would you like to come to America with your family and work here and grow and work in the land of freedom and opportunity? What do you think they'd say? I'm willing to take a bet. And so my whole point is, give everybody everything and identify the winners. And because you have a better place to live, you move them into the United States. That's how you win the technology war, because it's people writing code for hardware. You want the coders, you want the developers to control the narrative. And that's how you do it. And it's a proven model. We did it right through the First and Second World War. And that's why we're the most advanced economy in the world. Tell me that wouldn't work. So every time I see a lawmaker, I say, what are you guys doing by holding back technology? Sell it to them and sell it now. And then as soon as you figure out who's good, offer them a home, a berth, like we did in the Second World War. I like that strategy.
Mr. O'Leary, last question. We'll get you out of here. Quick one. One of the key tenets, as I understand it, of your investing philosophy is you don't want to allocate more than 5% into a single company and 10% in one sector. Curious, now that you have the investment in Bitzero, you've got some investment in some crypto exchanges. I believe you have some allocation to Bitcoin and other cryptocurrencies. How do you view Bitzero as fitting in with that? Do you kind of look at compute energy as a separate bucket, or do you lump all of these under kind of Bitcoin and crypto umbrella?
No, it's a very good question you're making, but just to clarify, it's no more than 5% in any one equity or debt instrument, no more than 20% in any one sector, with the exception of real estate. It's the only sector I've overexposure to. It's almost 28% now. But I've been in real estate forever. And so I'm very comfortable there in managing portfolios like that. To me, Bitzero falls into real estate because it's a real estate power company. It has to acquire leases or ownership of land and power. And then because it has sub 6 cents a kilowatt hour, all kinds of tenants are looking at it because they can't find it anywhere else, not in a geography where it's safe. But when you go to something like Bitcoin, and we've had quite a correction in crypto over the last, even just 9 weeks, and I speculate why that has happened. But it goes to show you why a strategy like a 5% weighting, I have a 5% weighting in Bitcoin and a 5% weighting in Ethereum. And that's pretty well all I own now because, like everybody else, I figured out I get 97% of the alpha of the crypto market with just 2 positions. The rest are irrelevant. And so and the reason that happened in the last few weeks is, as you recall, the Genius Act passed first. And so what happened there is that there was a very large contingency of people holding Bitcoin worldwide, making the assumption that it would win as the digital payment clearance system for microtransactions and other intergeographical transactions, that you would pay people in Bitcoin. It was used for some of that, except you have the risk of price volatility, which Bitcoin has. And then all of a sudden, the Genius Act was passed, making stablecoins legal. And so all of a sudden, that became the digital payment system clearing device. So I've now used stablecoins to clear payments across geographies. It's incredibly efficient without the volatility of the pricing because it's backed by very short duration T-bills under 92 days. So that sucked a little air out of Bitcoin. That was the beginning of its rolling over on this correction. But something else has happened that you should be aware of that is, I think, healthy. Others don't, but I think it's very healthy. The thousands and thousands of altcoins and rat coins and shit coins, whatever you want to call them, excuse my French, doesn't matter. They're all the same. They were born in the day of the digital crypto cowboy, and they were highly speculative and a lot of fun. But now with the horizon showing the Clarity Act around the corner, and I think it's Q1, Q2, others have different speculation, that will finally settle in terms of which regulator will call Bitcoin a commodity or security, Ethereum the same way. And then we're going to have the allocation from the institutional investors. So if you're running $500 billion, you don't own any crypto because you can't. Your compliance department won't allow you yet because we haven't had that ruling. But when you get it, you're going to do a very simple analysis. You're going to say, okay, I want exposure. Where do I get it? Where I have liquidity and I'm capturing 90% of the alpha. Well, all you need is Ethereum and Bitcoin. I mean, the numbers tell the story. So all the rest of the stuff has a huge challenge, because even if they have a good use case story, they don't have enough money to market that story to get indexed. And so I think we're going to be in a very interesting time over the next 2 years where all of this crap, what happens is it compresses in price because it can't get liquidity and it can't raise funds to market. And we've been talking about the blockchain coming into financial services for 12 years, and it is coming, but I think you're going to see it. The Ethereum Foundation, even tomorrow, is doing more announcements. So they're doing a really good job marketing. So if you look around the world at price discovery, in pretty well every financial market, within every 10 minutes, you get the price of Bitcoin and the price of Ethereum. Sometimes Solana, sometimes, but that's pretty well it. And so if I were Solana, I'd raise $100 million right now to market that so that you could try and squeeze into the index before Q2, so that institutions and investors like me say, well, I'll just put, if I'm taking a crypto position, instead of just doing Bitcoin and Ethereum, I'll add a third weighting in Solana, and then I got everything I need, And so, and it's not because I don't think there's other great ideas. It's because the numbers tell the story. It's a cruel reality. In this correction, you wish you only owned Bitcoin and Ethereum. They didn't get slaughtered like the shitcoins did. And I, excuse my French, I don't mean shitcoins. Well, maybe I do.
We love it.
You know what I mean. The crap. And so that crap is not, when you lose 80% of your value, it's really, really, really hard to come back, particularly when the big boys are coming in and allocating, and they want liquidity. The thing is, institutions that are pension plans and sovereign wealth, they create liquidity every time they rebalance. If they have a maximum of a 5% weighting in a Bitcoin and it goes to 6%, they sell down to 5. Or if it drops to 3, they buy up to 5, creating massive liquidity. And so with liquidity, you get more indexing. So that's, this is my opinion, but we'll see, it'll play out. But I've certainly invested that way. I have shed my shitcoins, and I focused on 2 positions, and I'm so glad I did.
If there's a Bitcoin maximalist and an Ethereum maximalist listening to this somewhere, and they're clapping their hands to that. Well, Mr. O'Leary, thank you so much. That was a great rip. Merry Christmas to you and your family, and thank you for taking the time.
All right, take care. Thanks.